You know, when you check your credit report, you're probably thinking about Equifax, Experian, or TransUnion, right? The big three. But here's the thing. They don't actually write your financial story. They're more like the publishers. The real authors, they're a whole group of companies you interact with every single day, and they are the hidden force shaping your entire financial life. So, if it's not the credit bureaus, then who is it? Who's feeding them the billions of data points that make up your report every single month? The answer? Well, it might just surprise you. Let's dive in. So here's our game plan for this explainer. We're going to pull back the curtain on this whole thing. We'll start by finding out who these invisible data suppliers are, then we'll get into the rules they're supposed to be playing by. After that, we'll see what happens when the whole system breaks down, how you can actually fight back, and finally, what your legal rights really are. All right, first up, let's meet the main characters in this story, the ones who are usually operating just behind the scenes. The industry has a special name for them, Furnishers. It's a pretty simple name, but their role is incredibly powerful. A furnisher is literally any company that reports or furnishes your information to the credit bureaus. They are the source, the origin of almost every single thing that ends up on your report. So who are they? Well, I guarantee you do business with a bunch of them. We're talking about your bank, your credit card companies, whoever gave you a car loan or a mortgage. Even some landlords and, yep, you guessed it, debt collection agencies are furnishers. They're constantly sending updates about you. Now, there's a really simple but super important distinction to get here. A furnisher sends your data to the credit bureaus. An end user is someone who pulls data from them, like when a lender checks your credit before giving you a loan. And here's the twist. A lot of companies, like your bank, are actually both. The whole system basically works like a giant game of telephone. You make a payment, that company tells the credit bureau, and the bureau adds it to your file. With all those steps and all those handoffs, you can see how easy it is for mistakes to just creep in. Now, thankfully, this isn't just the Wild West. There's supposed to be a legal framework in place to keep this whole process accurate and fair for everyone. And the main rulebook for all of this is the Fair Credit Reporting Act, or FCRA for short. This is the big federal law that lays out exactly what furnishers can and cannot do. It sets out all their legal duties to you, the consumer. Under the FCRA, furnishers have some pretty major responsibilities. For one, they can't report stuff they know is flat out wrong. They have a legal duty to correct mistakes. And get this, if you dispute something with a credit bureau, they are required by law to actually investigate it. They're even supposed to let you know when they report something negative about you. To manage this absolutely massive flow of information, the industry uses a standardized format called Metro 2. You can think of it as the secret computer language of credit reporting. Every month, billions with a B of data points get coded and sent using this system. It's built for efficiency, sure, but it's also a system where one tiny misplaced code can create one giant error on your report. Okay, so we've got the rules, we've got the system, but how well does it all actually work in the real world? Well, this is where things can get pretty messy. Just look at this number for a second. 1 in 5. What in the world does that mean? It means that according to a huge study by the Federal Trade Commission, 1 out of every 5 people has a real, confirmed mistake on their credit report. And for 5% of us, that's 1 in 20 people, the errors are so bad, they could literally get you denied for a loan, a credit card, or make you pay way higher interest rates. It's a huge deal. And this is absolutely not how it's supposed to be. The big players like Experian, they publish all these detailed best practices for furnishers. They recommend having clear written policies, running quality control checks, using data analytics, the whole shebang. This is the ideal. But then there's the reality. So what do these errors actually look like? Well, they can be anything from a misspelled name to having someone else's entire account history mixed in with yours. A closed account might show up as open. Or, and this one is the worst, you finally get an error fixed, only to see it pop right back up a few months later. And the stakes here in the real world are incredibly high. A mistake on your report isn't just some abstract number. It can literally stop you from getting a mortgage, a car, or even a job. It can mean you're paying more for car insurance or getting denied for an apartment. For some people, it can even put a security clearance at risk. So what can you possibly do if you're one of the millions of people with an error on your report? How do you fix this mess? Well, you have to fight back. And that all starts with the dispute process. Now, consumer advocates recommend a very specific strategy. First, get a brand new copy of your report. Then, write a detailed dispute letter. And the experts say you should avoid those simple online forms because they can sometimes limit your rights. Include copies of any proof you have, bank statements, letters, whatever. And finally, send it all by certified mail, return receipt requested, to both the credit bureau and the furnisher that reported the error in the first place. But even when you do everything right, the system can still let you down. A huge reason why is a practice that the National Consumer Law Center calls parroting. This is basically where the credit bureau just forwards your dispute to the furnisher, the furnisher's automated system spits back a message saying the data is correct, and the bureau just accepts that answer without doing any real, independent investigation of its own. It's a massive flaw. So what happens when you've disputed an error, maybe even a few times, and it's still sitting there on your report? You are not out of options. The FCRA actually gives you some really powerful rights and legal remedies. If a furnisher or a credit bureau fails to fix a clear error after you've properly disputed it, you can actually sue them under the FCRA. The outcome of that lawsuit is going to depend on their conduct. Was it just negligence, meaning they didn't do what any reasonable company should have done? Or was it willful, meaning they knew they were breaking the law or just didn't care? And if you win, you can be compensated for the harm you suffered. We're talking about actual damages, things like lost wages or even emotional distress. If their violation was willful, you could get statutory damages, punitive damages meant to punish them, and this part is absolutely key, they may have to pay your attorney's fees. So at the end of the day, it all comes down to this. Your credit report is the story of your financial life, and it's being written by dozens of authors you've never even met. So the crucial question you have to ask is, are they telling your story accurately? And if they're not, now you know you have the power to pick up the pen and demand a rewrite.